Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with another market wrap-up. We're sitting on Wednesday, August 15th, and there were definitely some bears out to play in the market today, but it was not all doom and gloom for some sectors. So we'll take a look at each and every one of them here quickly before we do, just kind of looking ahead on the earnings docket going into tomorrow. We do have Cisco coming out after hours tonight, and then Walmart tomorrow before the open. So Walmart and Cisco, both are pretty good sized companies. Obviously, Walmart's huge. Go ahead and make sure you're just kind of following along with the market, see how the market reacts to those big names. But as we talked before, now we're really stretching it on earnings, right? There's not too many big names left. So let's take a look at our overall market, kind of talk about the day that was. We gapped down on the open in our indexes and really had quite a bit of selling to start the day off. We did rally a little bit towards the tail part of the day. So some buyers were willing to come in. The NASDAQ was able to pop off of its 50-day moving average. That's where it found its intraday support today, rallying up a little bit, obviously still closing down on the day, but showing a little bit of momentum nonetheless. We certainly have been struggling and continue to push down off of resistance in the NASDAQ. We know the 50-day moving average acted as today's support level. We do know that can and oftentimes does act as support, but isn't 100% sure thing, unfortunately. So we do also know that our next level of support is going to be this previous swing low. I'd kind of like a break at this point in time. That's kind of what I would like to see. The pullback itself, if that's what this is, I reserve the right to change my mind. But right now, that kind of looks like it might be a tougher area that people want it to be, at least as of today. Taking a look at the S&P 500, no surprise, pretty similar. Didn't make it to its 50-day moving average, didn't make it back to that approximately 28 that's been support for us since we basically broke out of it. But a lot of buyers coming in off of the lows. So, if you ever kind of want to just take a look and see what, the day looked like, go in, take a closer look on a shorter term time frame. You can just get a little bit of perspective. Gap on the open, really fell the first hour and a half, kind of found its footing and kind of rallied up throughout the rest of the day. So that just kind of helps you, maybe get a little bit of a better understanding of the actual price action when you see these candlesticks. So we'll continue to watch those areas. 28's lining up pretty darn close to its 50-day moving average, so that should be continue to be support. If I'm bull, that's certainly what I'm watching for, at least. A little more weakness in our Dow Jones, but much like the NASDAQ, really broke down. It broke support today. The NASDAQ didn't break support. S&P didn't break support, but the Dow actually did break support. Really was in rough shape. Caught itself on the 50. Strong rally to close back above. So at least as of today, this looks like one of those little fake outs where it did break support on the intraday, but before the end of the day, was able to close back on top of that. So we'll want to continue to monitor that price range. The Russell really is kind of still sideways. And much like the NASDAQ, I'm looking at this range one way or the other. Eventually we're going to break. Remember, whenever we're in a trading range like this, it's perfectly reasonable if we want to play the edges, whether it's, make a bull put spread as support or whatever it might be. And it's also perfectly reasonable to say, go sideways. I'll see you when you get out of this. Don't be afraid to do that if you're not comfortable trading that. But really, not too much dramatic change there, although quite a bit of selling there in the Russell. It was a day for the ages because our XLB finally broke out of this little triangle that it has been with for so very long now. And it got ugly. It got ugly, and it got ugly fast after that gap this morning. We basically free fell to $57. Much like the rest of the market, we did catch our footing and have a little bit of a rally to close the day. Let's take a quick look here at the weekly chart. Now that we're out of that range, at least for the time being, we don't really have a lot of real support until about $56. That's kind of our next, major level of support, at least in my opinion. When I see a pattern like this, if I'm in, great for me, right? But if I'm not, one thing I'll watch for is working back towards this trend line that we were using as support as a potential resistance zone. So obviously, I don't know that we'll get there or what'll happen when we do, but that is something I will be watching for if we continue this rally off of the second part of the day into that old trend line. I'll be looking for that to potentially act as resistance. At least in this type of pattern, that's what I'm always looking for. But we're going to miss that. I'm going to miss saying we're still in that range. Rough day for the energy sector. We broke support on the open. We gapped right below that support on the open. And unlike, the materials that was able to rally second part of the day, that didn't happen with energy. We really just kind of sold off, closing below the 200-day moving average. That's not bullish. I don't know if that's enough. If I want to make a bearish trade after a move like this, that's going to probably be up to us individually. But it's going to have to sell me before it makes me turn back into a bull. If nothing else, I'm leaving it alone or bearish for the time being. That's a pretty clean break, pretty nasty. Didn't even really put up a fight at the 200. We saw a lot of these areas hit 50s and popped off of them pretty nicely. We didn't even try at the 200 on energy. So at least right now, that's something that's I'm not too interested in them right now personally. Our financials were able to kind of hold at support, a little bit of a back and forth day. In the grander sense, they're kind of boring today. They just kind of went back and forth, still sitting at that support level. So not a whole lot changed in that world today. Our industrials continue to kind of just be weak. We did really sell off. We broke support, much like the Dow Jones. We were able to rally on the intraday, closing back above it. But we're starting to see, a pattern of lower highs and lower lows. I know we didn't close today, but we've already made a previous swing low. I don't like the way this looks, especially when there's things that are showing strength. I'm not going to push the issue and try to talk myself into something I'm not comfortable with. I'll have to keep a closer eye on it. We're kind of, from a longer term point of view, we're kind of in the middle ish of a sideways range. Again, I'd like to, I hope that the buyers will step back in, take another run at that resistance. But at least with the way this chart looks today, I don't expect to be one of them for the time being. Technology, much like NASDAQ, we're struggling at resistance. Pretty much just always looks the same, right? We could probably just skip looking at this ETF, but we won't. So very, very similar to the NASDAQ. Our friends that we were looking at yesterday, pullbacks that were showing really good strength in the staples and also the real estate sector, both had very strong days here. You had the staples following our dojis to close last week to open this week. Our upward movement close above the intraday resistance confirmation candle yesterday really showed some pretty good strength. So on a day when the market was really, really struggling, we were finding a lot of strength here in the staples sector, and probably doing no small part to the overall strength of the sector and the trading pattern that it had going on. So many things that faltered today were things that were fighting with resistance, things that had already kind of been struggling, holding support. So I don't think it's a huge surprise that some of the better performers today were areas that had kind of established some support, weren't fighting with resistance. So it still looks really nice. Certainly trend looks intact. We know that we've got our pivot point down here. So as long as that holds, looking pretty good over there in the staples sector. Utilities, man, they're weird. They broke out today, and they were really strong early, and then they kind of gave it some back while the market was rallying. They also kind of rolled up, and I'm going to turn this to a weekly chart to kind of show you this. So we've been fighting. We broke resistance. You can kind of see that's about where they stopped at that next level of resistance that acted as a high, back in June last summer, basically. So not terribly surprised that there was some struggling there. Kind of surprised it made it all the way there in one day. But there's just lots of layers on utilities. I still don't feel like I have a very good handle on it. But we were able to clearly close above the breakout, regardless of my opinion. That certainly is what in fact happened. We did close above that resistance that we've been fighting with for a couple of weeks now. So you have to really call that a bullish signal. I think you don't really have a choice whether you want to do anything with it or not. You, of course, have a choice, but I think you have to call it a signal. Healthcare stayed pretty strong, no big, huge movement or anything, but we were able to hold the little intraday support that they've been working with in these last few days. Kind of avoided the selling that so much of the market experienced today. So we're still looking pretty strong overall, from a technical point of view in our healthcare. Our discretionary, who has been fighting with resistance, much like some of the other things we looked at, kind of caught its footing at its 50 to get a little bit of an intraday rally, but still quite a bit of resistance. Now we have, even more confirmation, right? That that's tough. That's not an easy level of resistance for this to break right now. So keep an eye on that, of course. Much like our staples, our real estate gave us that confirmation candle yesterday, following the doji on Monday. Really strong momentum in this sector here today. That's for sure. So the day where the market was really struggling, we did have a couple of setups that actually really came through nicely for us. So that's definitely nice to see. Trend still intact. Everything pretty much is about on the same page, much like staples. We now know where our previous or our new swing low is, our new pivot point is. Remember, when we're thinking about a trend, what we're really thinking is we should, if we're trading into this upward trend, is we should go above resistance, because that's what it's been doing, before we go below support, just because that's what it's been doing. That's kind of the thought behind it, the basic thought behind trend trading, right? So keep an eye on that, but definitely looking good. Gold, and I wanted to take a closer look at this here. We talked about it yesterday. So we had our big breakdown on Monday, kind of floored out yesterday, and then we broke down yet again here today. Let's go take a look at that on the intraday, kind of talk about and kind of see how that plays out. So this is the hourly chart for gold. So we had our break, our Monday break, and then we kind of caught our footing, and we had yesterday where we really just kind of hung out at that support level. And then all of a sudden we break through that and really, really struggle. That's why identifying these floors and ceilings and preparing, trades, whether you're getting in or out on these signals, is so very important. Not a lot of bullish stuff in sight for gold, as we've talked before. There's really not a lot of support until about 11:30 or thereabouts. So very weak day in a very weak area in gold. Silver, very similar, very violently dropping to the downside. So again, much like the gold, it kind of had the original break up the little floor that we've been building. We kind of build an intraday floor, and then that floor just completely fell out from underneath us here today. So still very, very bearish signals going on in our metals. That is for darn sure. Natural gas continues to kind of hold its own. Pretty mixed day, but hasn't really changed anything from a technical point of view. Still is pretty extended, never really got much of a pullback. We do have, some overhead resistance not too far away in that $3 area, but technically we really haven't seen any changes on that side of things. Crude, much like the energy ETF that we looked at, really had a rough day. That floor gave out. This time wasn't able to hold us up. Our next real level of support is probably at $64. I think most traders, myself included, would agree with that, or approximately 64. Definitely showing some weakness. Remember, we've made consecutive lower highs, and of course, by virtue of breaking support, consecutive lower lows. So we're definitely seeing some bearish signals in crude right now. Watch out for 64 if we get there. That's going to line up just a little north of our 200-day moving average as it currently stands. So we'll see if that can be a price that can entice buyers if we get down to that area. And lastly, taking a look here at our dollar, continue the overall strength. We did see some intraday selling, kind of closing in kind of one of those gravestone type of doji candlesticks. I wouldn't call that a bearish signal. I would just think if I'm in this, that might lead to some short-term selling. I know some people might. I wouldn't want to go against this overall momentum personally. So we're still very much intact from a technical point of view. Did run out of a little bit of steam today. We did see some intraday selling to kind of close down near that bottom there, but nothing really has changed from a technical point of view. Overall, that still remains very strong for us. So a couple, lessons that, we can take out of the market. I wanted to share this. I complained yesterday about Macy's how it broke out the day before earnings and how, I couldn't do anything with it. Of course, today I was thinking I'm a genius because I didn't do anything with it. I followed my rules, no trading earnings, right? That's why having rules are so important. I'd be lying if I said that yesterday when it was breaking out, I wasn't kind of mad at it and thinking, man, could I do it? But I didn't because I have rules. And, you don't hold a swing trade through earnings. According to my rules, I'm not willing to take that risk. Of course, yesterday I'm feeling, darn it, I should change my rules. Today, no, exactly why I have these rules in place. All right, we have to have rules, whatever they might be. So definitely a big miss on Macy's. And boy, things that turned around today, Macy's was definitely not one of them. So a very interesting day in the market. But really, a lot of things, made sense technically. Our gold breaking that little floor. We talked yesterday, we don't know if it's 2 days or 2 weeks, but when that floor gave out, that was going to be a sell signal. That makes sense. Things at resistance, struggling, that makes sense. Our nice pullbacks that had some confirmation yesterday in staples and real estate, having a good day, that makes sense. Healthcare holding its own. It doesn't have a lot of resistance. It held its own in a day of selling. So a lot of things made a lot of sense, I think, in today's market. And then this is why this is such an important part of my daily routine going through this process. So I hope you guys find it helpful. With that, ladies and gentlemen, that'll do it for today's market recap. As always, I certainly appreciate everybody's time. If you haven't already, subscribe to the Tackle Trading YouTube channel and hit that bell for notifications so you can always be alerted whenever we're doing a new video, whether it's a live stream, a tutorial, a definition, trade ideas, whatever it might be. We've always got another video right around the corner, and we love to share them with you. If you enjoyed the market recap, it's always helpful and appreciated if you do hit that like button. That is very helpful to let us know we're doing on the right track, doing a good job. Thank you in advance for that. We will let you get out of here today. But as always, happy trading, and I will see you in the next one.